Hello traders, welcome to the Flow Show. Here we are, Tuesday 25th of February. And ready to do battle with markets once again. Well, not me, I'm finishing after the show for the concert, so I'll be ducking out. Morning Kay, how's it going?
Morning, Ryan. Morning, everybody. Yeah, all good. Ready to rock and roll another day. But it does seem a bit quieter today.
Yeah, seen a bit of flows coming through though. I don't know if it's end of month stuff. We
Yeah,
saw
I think so.
some stuff before the fix yesterday, and Mr. EoM man seemed a bit busy this morning as well.
Yeah, absolutely. It's very possible that we are seeing the first legs of the month end. Yeah.
Yeah, so keep an eye on those clocks. Value date tomorrow for end of month, so that'll be one of the busier ones. But said we've seen it quite busy already yesterday afternoon and this morning. Right, let's get cracking. Bit of data out in Japan, PPI data. Services PPI data coming in at 3.1% year on year. I think that's a final number though, I'm not sure. Either way, it's still toppy, coming at 3.1%. Another brick in the wall for BOJ Hawks over there. And for PM Ishiba, he says he was able to reach an agreement on a budget deal. So that's another thing that's going through the pipes over there. He just needs to swing it by some of the other parties and get agreements there, and then we will have a budget being passed over there. That will also come into impact the new fiscal year and whatnot. So it will come into this spring stuff that's going to be happening soon with wages and everything else going on around then. Over at the Bank of England, Archdove Dhingra has had her term extended at the bank, I think to 2028, I think it's going out to now. So she's still going to be there. She didn't waste any time getting on the wires later on yesterday evening, saying that everyone on the MPC has a different definition of the pace of rate cuts implied by the term gradual. She says her definition of gradual rate cuts does not mean 25 pips per quarter. Being a dove, that means she wants to go faster. She says if you cut by 25 pips at a quarterly pace, you will still be in restrictive territory all this year. So, as I say, indications that she's going to continue voting for cuts, it seems. She also says she's not seeing any resurgence of inflationary pressures, although the data thus far says otherwise. We'll see who wins out of that battle. Over in the EU, we've had the latest wage data, quarterly wage data for Q4. Wages down or up at 4.1%, which is down from the Q3 5.4%. Still running quite hot, but coming down. That will please Mr. Lane, the chief economist. One of the hawks, the ECB, isn't quite for turning like some of the others in terms of rate cuts. Kestrel Kazakhs says, I think we have to continue cutting rates. We will take rate cuts step by step. But says the rate path hinges on Trump's policies, and we must be cautious as we near the terminal rate. Before I get into all the poxy politics, Kay, anything you want to comment on that lot?
No, not really, mate. I mean, yeah, as you say, Dhingra, Ultra Dove. Regarding the European wages, there were some reports out earlier that I think it's earlier this month or start of the month that they expect those wages to drop quite significantly during 2025. So that is something that we should keep an eye on.
Yeah, and well, they've been expecting those wages to drop for quite some time. It hasn't happened, so we shall see. Right, it's bloody politics from here on out, unfortunately. Right, so more stuff out of Germany, obviously. The co-leader of the SPD party, which is the one that Mr. Merz of the CDU wants to form a coalition with, said it's unclear if the SDP will be part of a future government. and dropping perhaps some conditions for them. They said we need billions of euros of investment in the coming years to ensure that Germany remains an efficient country. Merz went on to reaffirm that he wants to form a coalition with the SPD. He says that that's ongoing. What is the main topic among a lot of parties is potentially reforming the debt brake. Now, for those that do not know, the debt brake is something that Germany's got in place basically to stop them borrowing more than they can afford. In short form, typical German, they want control, so they don't want to be borrowing outside of their fiscal space, if you like. So to get them to be able to borrow more, one of the things they're going to be needing to borrow on is defence and stuff. They might need to reform the debt brake. It's basically a ratio that they've got. And one of those reasons potentially is because they are, according to sources, considering a 200 billion emergency budget or raising of money for defence spending. But as always, they want to move the goalposts and keep this out of normal budget terms. So they want to create a supplementary type thing to get this money that doesn't fall into their normal fiscal measures, thus will not fall into their European obligations on fiscal spending and debt and whatnot. This is something all European countries are going to be looking at, raising spending, and it's a conversation we've been having a lot. At a time when economies in the Eurozone aren't doing all that great, the last thing they want to be doing is raising money to spend just on defence. They want to spend it to stimulate their economies, and things like that, as we discussed, may only cause a short uplift in growth activity, spending on defence. But Germany, say, looking at 200 billion in getting that up. Kay, how much can they take their foot off the brake in terms of debt? Are we going to see them really going for it, or are they still going to stay pretty cautious?
But in a way, they have to. Now, that's the issue with the coalition, is that they don't agree how to do it. They kind of all agree upon the fact that there's more needed, but it's how and where it comes from that is going to be quite a sticking point. And where Merz hopes to get his coalition or a coalition aligned with his ideas or any possibilities of doing that, that's probably going to be where it's going to be the difficult discussions. I mean, to change the debt brake, they will need to obviously change the law, and that's going to be another one where it's going to be sticky. So we're not at the end of this story, but again, they all agree that it's needed. So I mean, it's how much does one agree to give to the other, or to come to find a consensus on how they are going to do it. That remains to be seen, and potentially that's a drag on the formation of a real coalition. And the longer it takes, the more the market or also could get a bit nervous.
Yeah, I mean, do you think they're scared of letting the genie out the bottle? I mean, for all the jokes we make about Germany, they are probably the most fiscally responsible country in the Eurozone, if not in the world. And, it would be a big deal if they have to take their foot off the brake, because it hasn't been on for that long, this debt brake. They put it on, when they're running big surpluses and, they could afford not to borrow as much. But if they loosen the taps, will they be able to tighten them again?
Well, that's the question. It's a difficult one to answer right now. I mean, get a revival in the European economy, which is not yet at present. Then they can put an extraordinary budget and get back into the frame later. But the problem is that it's such a big amount, and geopolitics are telling them that they have. It's going to be a hard one not to go. So it's now impossible not to put that extra money on the table. So this is going to be part of the very hard discussions, and I don't know down to where Germany wants to go to the road of doing reforms, because as you say, letting the genie out of the bottle, how do you put it back into it? It's going to be a very, very big question.
Yeah, absolutely. Right, Mr. Musk, following the voluntary, she's called them voluntary redundancy thing that they put in place. That's all passed and done. But Mr. Musk has come out saying that starting this week, those who still fail to return to office will be placed on administrative leave. So he's not taking any shit. Get back to work, get back to the office, or you're out on your ear, basically. Mexican President Sheinbaum says she's eyeing a call with Trump on Friday to talk about agreements with the US. This is to do with the impending deadline on first round tariffs that are coming in end of February, beginning of March. Those are the ones that got kicked from the beginning of February. She says she's exploring tariffs on countries without free trade deals, and the Economic Ministerial Team from Mexico is in Washington studying China tariffs. This is apparently Mexico looking to maybe put tariffs on China in an attempt to appease the US on certain things like drugs and whatever coming in. So from all accounts, it looks like Mexico is working closely on a deal to avoid these upcoming tariffs. Maybe the risk is that they also work out some of the other stuff that's coming, the reciprocal tariffs that Trump's talked about. That's the second round of tariffs that we've heard about. So the door's really open to what we get in terms of no deal, a deal, and how far ranging that deal might be, whether it's just on the immigration drugs thing or whether it encompasses more stuff as well. That will be more positive for the Mex if that's the case. So we might be talking a question of scale on what the deals are like. Over on the Ukraine, President Trump says Ukraine talks are proceeding very well. He said at the same time he is in serious discussions with Putin concerning ending the war and also major economic development transactions, which will take place between the US and Russia. He said talks are proceeding very well. He added that Ukraine's land is part of the negotiations, and he hopes Ukraine can take back some of its land and that Putin will accept European peacekeepers. So slowly and surely we're getting the broad outlines of what's coming or potentially coming in this deal to potentially end the war. Treasury Secretary Bessent says they are at the 1 yard line on the Ukraine minerals deal. Putin was also out speaking, and a bit of a knockback perhaps to sentiment. He says Trump's position is not in Russia's interests, it is in Ukraine's interests. He says the next contacts between Russia and the US will focus primarily on bilateral relations. But then there is one half bit of good news, if you can call it that. There was a big shindig with the UN, US, Macron sticking his nose in everything as usual. So there was a US drafted Ukraine resolution put forward at the Security Council, and Russia let that pass. They didn't amend it in any way, so effectively agreeing with it. So we're all in, I don't know where we are, Kay. We're still heading towards a potential deal. Obviously, lots of stuff still to be negotiated. We need this mineral deal to pass first before the next step, I think.
Yeah, that is going to be one step, but I have really a lot of questions surrounding the double act that's been played. On the one hand, supportive, maybe Ukraine can get a bit of land back or so, but on the other hand, the buddy stuff between Trump and Russia, and potentially even China arriving later, even though there will be some tariffs, is still not giving me a lot of confidence that it's going to be a good deal for those who are on the ground, or for Ukraine, and perhaps even for Europe, if we read what he's saying, or all saying that, I still don't know. It's too early to really say whether a deal can be qualified as good, or as really bad, because uh, once a deal may be done, what's happening afterwards? Because we've seen all those moves that, yeah, I mean, Trump, US is really getting closer to Russia again, to Russia's stance of things. So, what's going to come out of the box, once the deals will be done? So, uh, yeah, I'm reserving my answer to that. I really can't say that. I I mean, it's hard to see the real positives, although, as we also know, that market doesn't markets don't really care, is a big word, but if you look at how models and stuff react, they will react to what is positive and what is negative in numbers, and so yeah, it could end up being extremely positive as well. But yeah, I don't know whether we are yet at that stage or not. So I'm really being very, very cautious with everything that's going on around there now.
Yeah, absolutely. And you know, Galaxy just said deals with Putin and Trump are usually not worth the paper they're written on. Okay, that's one discussion you can have on that side of things. Purely from a trading perspective, if the bullets and bombs stop flying, the market will buy risk on that. That's plain and simple. So that's really the only concern. What happens after that? Well, that's something else we have to trade with then. But we have to take one thing at a time, and that's what situation we're in at the moment. If we get headlines that the bombs and bullets are stopped, that's all we're going to be reacting to. But just to give you an idea, in case you weren't aware of what's going on with all this and why this mineral stuff is so important, this was taken from the Independent newspaper, showing you, oh, if I can get it right, showing you where a lot of the critical materials are. And as you can see, they're all over here, which is all the contested land currently where the main part of the war is being waged on. So you can see why this is important, and you can see why what land gets given up, given back, kept, whatever, is going to be important in those negotiations. Okay, no one wants the bits over here. Everyone wants the bits over here. So that's what's going to be really important. How much is Ukraine potentially going to want to give up? How much is Russia going to want? How much is Europe and the US going to allow either to have? So that's why this is all important, this minerals deal, because if the US is poking around right over here, digging stuff up, bases, you name it, that effectively puts a line in against Russia. And is Russia going to be happy having the US plonked right next to whatever border happens to develop from that point? So that's the reason why this is such a big deal in terms of the war. It's all about the money, folks, as always. Right, let's move on because Mr. Trump hasn't finished just yet. He also wants to restart the Keystone pipeline, saying that the company that was doing the pipeline should return to the US and resume construction. That got the kibosh when Trump got put out of office. And then a little reminder from Mr. Trump. He said that they are on time with tariffs and they are moving along rapidly, and tariffs on Canada and Mexico will go forward. He's talking about all the tariffs, really, the reciprocal tariffs. But as I say, we are approaching that deadline for the first round of tariffs, Mexico and Canada. So there's a little nudge in there that the clock is ticking. We've not heard too much out of Canada. I mentioned earlier what we've heard from Mexico, that they're working on stuff. Not too much from Canada.
And they are. They're also working on stuff there. And is it not, as we were saying yesterday, first the let's go and slap them on, and then it's he hasn't waited for the weekend to do it. He does it on Tuesday, right? So it gives them still 3 days or so to come back to the table, right?
Yeah, yeah. I was going to say we haven't had any updates as far as I can see from Canada. We knew they were working on stuff, but we haven't had any updates from them like we've had from. Unless I missed something, has there been any talk, Kay?
I'm sorry.
I said have we had any updates from Canada? We knew they were working on
No,
stuff
but we know
weeks
they
ago,
are
but
they have a team over there, right? So I guess they are well. Trudeau said when was it over the weekend or on Monday or so? He said that they are working on it and will reciprocate if the US goes forward with the tariffs. But I think they have a near permanent team over in the US to discuss, right?
yeah, I hope Musk is charging them rent for being over there.
Oh, he will. He
he
will.
won't.
It,
He won't be
that
paying for
story
their
about that
bit of
story
breakfast.
about those emails was quite strong as well. I said, if you don't reply to your next email, you're gone.
Yeah, oh, I hate emails. But anyway, yeah, it's yeah, they'll be paying their own way over there, no doubt. Lastly, Apple, they're going to all be wearing their mega hats because they're going to spend apparently more than 500 billion in the US over the next 4 years building plants and whatnot, manufacturing phones there. It's a bit like it was the General Motors, wasn't it, in Trump 1.0, who was going to bring everything back to the US and open up factories and whatnot. And now it's Apple, who are the firm who are going to do that this time around. So we'll see what that happens over the next 4 years. They might just buff it off. That was a funny thing about the first round of Trump, Kay, that all these companies said they were going to come back and they started coming back. But then what happened? Did they all disappear again?
Well, they got perhaps a bit stopped short when he didn't get re-elected. But now they have to pick it up again, right?
Yeah, exactly. And make the right noises. And then in 4 years' time, they can give it all up again.
Yeah,
Who knows?
exactly.
Let's see what happens. That's if Trump hasn't changed the whole constitution to stay in power for another 20 years. Bit like Xi and Putin. He might go down that road. Who knows? We'll cross that bridge in 3 and a bit years' time. Right, that's it on the headline front. Unless you've got anything else, Kay?
No, go ahead, move on.
Good, 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 good. What have we got coming up? Got anything coming up today? I haven't even looked. Bit light on the old data in Europe this morning. What have we got in the US? Just some house price data coming up. And the Conference Board consumer confidence number. That's probably the main highlight on the calendar if we're going to get any moves. So keep an eye on that one. Consumer confidence taking a bit of a battering in the Michigan numbers. Let's see if it takes a bit of a battering in this one. Again, look at those inflation expectations. I don't know if there's going to be politics being pulled in this one as well as to whether they interview or separate Democrats from Republicans in terms of answers, but just take the numbers for what they are. We did see a tick up in those inflation expectation numbers last month. I can't remember what the number was in right now. Was it 5 point something? I can't remember. I have to look it up. Anyway, that's what to look forward to for those numbers. Then we get some regional manufacturing services numbers as well. Right, so what's been going on? I'm going to start with dollar yen because that's been pretty clear what's happening in there. As we mentioned, yesterday afternoon, we got, just as we were getting into the fix hour, let's call it that, we got a bit of dollar buying, a bit of yen buying coming in, a bit of dollar buying in the other pairs. We also saw yields on the move. We got another tap down to this 149.20s area before we bounced and pretty much reversed that straight away after the fix. We've had exactly the same thing this morning. Mr. 8 a.m. man stepping in and doing the same thing. Yields came down, yen got bought, dollar got bought, but we held this level again in dollar yen. So it is proving to be a bit of a tough nut. Bounces, though, are getting weaker and weaker. We couldn't get much back into 150 on this one before coming down. Now we're struggling to get back to it. I think if we get a test of 150 and it starts holding, then we might be heading for a bit of a clear out to the downside. If that happens and we're going through that 148.84 level, which is a bit of a decent level long term as well, then we're going to be heading much lower probably, and all out move to that 147 area, which is another big one and long term level to look at. Things like cable saw the same sort of thing yesterday, and today we had this dip in cable, dollar getting bought, reversed. Had this dip in cable this morning, it's reversed, but again not as much. So we're seeing these flows coming through. You need to keep an eye on them because they can happen around the tops of the hours or around the big fix moments. Who knows, maybe it was all done in those two blips, but keep an eye on it anyway. If you start seeing some of these sudden moves out of nowhere, have a look at the clock. If it's close to the hour, then it might be just one of those hourly fixes. Otherwise, not a lot else going on, Kay, in a lot of pairs at the moment. What are your feelings for dollar yen right now?
Yes, well, there's two things there. If you look at the two, let's say the two major pairs, you have the dollar yen, which is holding that level right down there, and you have the euro yen, which comes every time it comes close to the 156, 155 and a half. I can show that. There's some really decent levels there. Yeah, the rest is trying to find its way. Is that how we say it? But it is a fact that risk is weighing on stuff. We're seeing the Aussie and the Kiwi have weakened. Canadian dollar is trading on the back of those potential tariffs again, same as the MEX that's going up and down. There is a bit of stuff on the move, but the majors are relatively quiet. One that is looking a bit fragile right now is also dollar Swiss. So, but again, we are approaching these announcements on the next tariffs or so. That's for one, and then we are entering month end, and the equity markets have been on the move. The bond market has been on the move. There could be a bit of stuff to do, and that is, I guess, what's going to move the markets around over the next few days. I'm not sure data are going to be very important, although this afternoon, as you said, that consumer confidence, because that is one that the Fed is closely watching, that could be a bit of a mover. Yeah, indeed.
Yeah, I think the data points at the moment, you just got to take them as a separate moment in time. Yeah, you can trade around it. You can trade any changes in rate expectations for about 5-10 minutes, and then we go back to trading everything else. And I think you've also got to start pigeonholing some of these currencies as well, particularly the CAD and the MEX. I mean, we said it as soon as we got the pump of these tariffs early February. We said the market is going to push it out its mind until a week before the deadline, and then it will come back trading it. And here we are coming back and trading it. Dollar CAD, it's nudging back around that break point. I actually added to my shorts yesterday and got high ticked out of it overnight in that move there. I had my stop at 80. And yeah, right on the high there as per usual. And it only traded there because he got offered there, not because he actually traded there. Anyway, enough of me moaning. But we're not getting through. We're not breaking back above. We're having these little nudges, but they're not holding. So it's not broken back above yet. I'm not tempted to get in. I still like the level. I still like the short side. But I can just see us getting a bit of headline ping pong going on. 11th hour stuff, maybe there's a deal, maybe there's not a deal, and we get a bit of jumpiness here. I think if we get to a point of peak pessimism, i.e. if the market's thinking these tariffs are coming on, there's no deal coming, and we're seeing a rally, I think I might hit that, because I do feel on this particular episode, immigration, drugs and whatnot, there is deals to be done. The reciprocal trade stuff, that's another kettle of fish. And if the deadline gets punted again, that would also be a small positive for the CAD. So I think, yeah, you've got to take CAD pairs, MEX pairs separately to everything else at the moment. It doesn't seem like the MEX is reacting as much as dollar CAD at the moment. I mean, well, dollar CAD isn't doing a lot, Kay, but it seems like everyone's listening to Shine Bomb and thinking perhaps there's a greater chance of a deal right now than being publicised from the Canadian side.
Yeah, that's the thing. We as retail traders, we are always thinking, oh yeah, this is the start of the next big one. But you have to put yourself always in a bit in the shoes of the bigger money managers or just like institutionals, and they are what they are seeing is okay, it's not done yet. So you have algos, you have retailers, you have the hedge fund, the short term players, the short term hitters. They are going to react to every headline, but the longer term players, they don't. They wait for it to happen, and then they will react to it, and they will then produce the bigger move, I would say. And because as we saw, of course, dollar CAD is higher. It went 50, 60 points up on the Trump lines. Dollar MEX also went up. What is it, like 7, 8, 10? Wow, like well, no, close to 1%. No, but that's an emerging market currency still. So a 1% move is not unusual. But yeah, as I said, the longer term players, they will step in, and or investors then will step in and say, okay, I mean, do we want to be in the mix, or don't we want to be in the mix, for instance? And that's then going to create your bigger move once they know exactly what is going on.
Yeah. And in the meanwhile, we're just going to be trading between the deadlines. So
Yeah.
if the deal gets done, we'll see a bit of relief probably in the CAD and the MEX, and then the market will switch off until we approach the April deadlines for the rest of the reciprocal tariffs and whatnot, and we play the same game all over again. So yeah, as long as you know what a currency is trading at any particular moment, you know how to react to it or not react to it, versus the longer term fundamentals and whatnot. Sorry, mate.
Yeah, what I would say is don't push your positions on all those headlines that we see. This is exactly how I trade right now. I had a pretty decent week last week, and but this week I've been wrong. I've been actually wrong on 60% of or 70% of my positions this week so far. But I've always kept it to small amounts, so not to give back much, or if not all. I mean, don't not to give back, because I don't know exactly what to think, and I see those moves. I'm a trader. I always want to be in moves, but the how shall I say, the clue in continuing to be in markets without really doing anything silly is to adapt your amounts. And then if you're not too sure about stuff, like, just trade smaller and get out perhaps a little bit quicker. I tried the Aussie, I tried the Kiwi, doesn't work. Okay, well, let's just move out and see what else there is to do. This is the kind of market I think we're in right now, and until we see clarity, I'm going to continue to trade in relatively smalls. If it's headline trading, you really need to be keeping all the positions close to the chest, and that's how you preserve your account as well.
Yeah, absolutely, and that's my exact thinking for dollar CAD. Where's my bits gone? Oh, it's all disappeared. Happy days. Don't know what's going on there. Oh, let's give that a go. Nope, I don't know what's going on. Anyway, Anyway, that was my thinking of dollar CAD. You know, I could trade here. I like the levels, but you know, if we get a headline saying that the deal's not close, we're going to be up at 144. So you know, the risk to my view on the trade is such that it's too risky. Trying to fish around in the middle here with these headlines. But oh, there we go, we're back. If I see a rally up here on a bad news headline, then that might be something I'll look to trade, because the market has now reacted. So it's reacted to the possibility of no deal. So if we get a confirmation that it's no deal, it's probably going to be a limited reaction further upside. So, and if I think that deal is going to be done, that's the move I'm going to be looking at. So I'd rather let the market play through the ping pong 11th hour stuff and then react to it after that, rather than trying to pick a side in the middle here that can get flipped out on a headline in the meantime. Anyway, let's move on to some other stuff. Gold, I'm just going to show quickly. I know Kay's got a lot of stuff going on here, but you know me, I like to draw me lines in as we're going along. So we've got a bit of a top forming up here, 29.54, 55. We had the high, we had the dip, we had the retest and hold, we had the dip, we've had another retest and hold, we've had the dip. Does it mean we're going all the way down to 28s? Not yet, because we're still holding support around here. But as I always like to say, if you want to short a rallying market, this is the price action you want to look for. Definitive levels that are starting to hold, gives you something to lean against. If you want to short here, go ahead. You're wrong above 60. So $5-6, you don't, that's all you need to waste on a trade, not 20, 30, 40 bucks to be wrong. Okay. You know, you try doing that here, then you're going to be wrong quite a lot, unless you manage to pick these tops. But we've got a bit of the trend itself is still ongoing. And I just want to highlight this as well, which I noticed because I went on a wider chart. Keep an eye on this 55 moving average, 55-day moving average on the 4-hour chart, because it's held all through this year, and it's a pretty good level that the market respects time and time again. Yeah, often you get a few messy points, but as you can see, there's a lot of times it gets respected. And so if you're looking to buy the dip, it's just coming in against this 29.20 area, just above that 29.20 area that I've got as possible support. Remember, a lot of these lines are all possibilities. Okay, if we get dips down there, I'll keep the ones that work and get rid of the ones that don't work and build the picture up. But yeah, it's just something I want to point out. This moving average is looking a pretty good one at the moment. Kate, right, I'm going to bring it over to you, mate.
Charles. And for once, I am going to start with something different. Let's pull this one up. Excuse me for sometimes my chart needing to reload, because we have a little some updates to be done. Look at the S&P and just taking this year's move. So we had a bit of a low there that we printed around the start of January, and from there we printed a fresh high. And look where we are here. We are on the approach of the 50% of this move, which is 59.5. And we also have a bit of channel support coming in not far from there. Right now it's around 59.40, 45, but as time goes on, it's going to be trading around this 59.50 as well. And we are not far away. The futures are trading at 59.70 right now. So we're only 20 points away from this. I think this might be quite important, in at least for the short term, if we get through this. Okay, this could trigger another bit of a move, 50 points, but it could also mean that we are going back to somewhere to mid 58s, if the market's really getting into a bit of a get me out of this mode or mood, right? So we've got to be a bit careful for the levels we are in now in the S&P. Inversely, obviously, if we go for a test and even down, let's say to 59.40 or so, and then start to move higher again, this is still going to be just another correction, okay? For the time being, in the more medium term, we are still at very lofty levels. Never say never, obviously. People will say like, okay, this is it. We have seen the top. But all of this now is, as we have been commenting so often, I mean, the situations are still very fluid, but it could be a testimony now of the market starting to test, doubt, or the euphoria maybe a bit out of the Trump's inauguration, and now we are going to have to see whether he's really doing all he can or the best for the Americans. And there's a few things that are being put to the test right now. So you have this S&P for one there, and again. We are on the US 10-year again, which where the bond market was supposed to come down. It's actually moving up, so the yields are coming down, and we are sorry, around the next important level here. We're trading just a few ticks above right now, or are we just yeah, we know we're actually trading bang on it. So this is the next decent level. You know, I've because we more talk perhaps on face shows than we do here. I still think that give and take, and that's why I've been saying on face shows that I think this was a bit high for my liking here. I think the neutral zone, in my opinion, and I've been talking about it when we were around here, is more somewhere around 420 right now, and give and take 20. You can never stick it really close to it, but give and take 20 bps below and 20, 30 bps below and above. This is kind of my neutral zone, and we are coming back into this. This is also telling me that the market is now done perhaps with the first round. We can still have second rounds, depending on what Trump's policies are going to be moving forward. But the market is gradually coming back, and it is a relatively important level here. But I still think that the zone of equilibrium will lay around here somewhere. So we're gradually coming back in this zone of my equilibrium, at least on the US rates. Now let's move back to what we are doing, because I wanted to show this euro yen, and I know a lot of people are looking at this, but I just wanted for our community to show it again. 155.5, 156. Okay, this I think is a very important level, because it's really there's a lot of coming together here, and it's also it's on the daily. Okay, it's not it's not your short-term chart, right? This is been forming since 2023. Some see this as a potential head and shoulder. So for various reasons, this is going to be a very important zone. And I think if one day we wake up and we're trading below 155.5 in the euro yen, that means, well, can mean either or both of two things: is that the eurozone is still under fire, or that the yen is really continuing to see all those tailwinds that it has right now, and this is going to be perhaps one of those potentially weaker crosses where it can actually get lower. But until it happens, ladies and gentlemen, I wouldn't go and sell it right here. This is long term enough to wait for a decisive break. What I do think, though, is for as long as the situation remains fluid and we see those tailwinds for the yen, is that on any rallies, whether it be back up to 158 or I'm actually kind of hoping that we get back into this 159s or so zone, that we are going to see rally sellers, at least, I think, at least until this month is over and we know We have month-end behind us, and also we know perhaps a little bit more on the tariff situation. We know it's like basically Canada and Mexico right now, but we never know. He may say something about the other tariffs on Europe also, or perhaps still letting Japan off the hook, in which case there is a potential break coming off this one. Some that I tried yesterday, well, this one I was trying to play this wedge again. It didn't really work. I sold it just around here, and quite fortunate. Didn't like what the tariff comments and everything were doing, so, and risk were not looking very good. So I moved out at break even, and today we are trading above. So this could actually signal a move back up to 165 3/4, 166, or even 166.30 before looking back. Now, if we get back down below 164.80, it could signal also a failure, but this is not looking really great for risk, and the euro kiwi has done exactly the same. Still inside, it's a different animal here, but we have broken back above 182 3/4, and we're already trading back very close to the next level here, which is around 183.5. So this is your negative risk play in play, I think. And typically, when risk is negative, the euro versus commodity currencies, especially, is doing better. Okay, so this is what is going on right now. I trust Bran wants to see what's going on in the cable. Did I lose some of my lines as well?
Yeah, I think there's some server problems at TradingView or something.
Okay.
Yeah, a bit slow or something.
Okay, I'm just gonna leave this one here. We're turning around the 0 point here for me. 10.15, we just briefly went below 126, 10.15. I do have another line coming in here around the figure. This figure 15 on the cable is still acting as a half decent support right now. But on the inversely, 126.40 and then the 126.60 is probably going to cap the debates for now as well. Yeah, I'm going to stop it there, because I think, yeah, that we have lost some stuff there, right, Ryan? So I'm going to give it back to you, mate, and call it a day for today.
Yeah, thank you very much, mate. Good stuff as always. Yeah, I think we've got some problems with TradingView at the moment. Have a great day, everybody. You won't see me until Thursday, so I'll leave you in Mr. K's capable hands. I'll see you then. Otherwise, yeah, have a good one, and Kay will see you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.